Hello everyone, welcome back to the tokenized training series. Today we look at how asset issuers can launch retail reward asset products on Solana and reach retail investors at scale. First, how to issue tokenized assets on Solana and reach a growing retail investor base. Second, the operational systems required to run a compliant retail product, including KYC, custody, settlement, and monitoring. So retail adoption of tokenized assets is growing quickly. As of March 2026, Solana has more than 154,000 wallets holding tokenized reward assets, slightly surpassing Ethereum. Ethereum still leads in total capital lock with 15.5 billion dollars, while Solana currently holds about 1.8 billion dollars. But this shows a clear split in the market. Ethereum clearly attracts institutional capital, while Solana is becoming the main network for retail participation. The market is dividing into two different environments. Ethereum is optimized for institutions. It supports large capital pools, but fees are higher and minimum investment sizes tend to be larger. Solana, on the other hand, is optimized for retail access. Transaction fees are close to zero, settlement happens quickly, and assets can be divided into small fractions. Solana enables retail distribution for several reasons. First, transaction fees are extremely low. Even a small $10 investment remains almost unchanged after settlement costs. Second, transactions finalize in seconds, which supports active trading and liquidity. Third, more than 154,000 wallets already hold tokenized assets, giving issuers a built-in retail distribution base. And institutional activity is also growing, with Solana ETFs approved in 2025 and major companies exploring stablecoin payments on the network. Launching a product for thousands of retail investors requires a different structure. Assets must be fractionalized so small investors can participate. Every wallet must pass KYC screening before transfers are approved, and retail investors also expect secondary market access so they can sell before maturity. And finally, large numbers of investors require automated monitoring and reporting. For example, a 50,000 US private credit asset could be divided into 5,000 tokens worth $10 each, making it accessible to smaller investors. Before the asset becomes available to investors, the on-chain structure must match the legal structure. The real asset remains with a regulated custodian. The token represents the investor's legal claim to that asset. Three elements must be configured. Define the total token supply and fractional unit structure. Define smart contract rules such as transfer restrictions and compliance triggers. Set pricing so the asset can be purchased in retail-friendly denominations. This ensures the digital token mirrors the real asset. Once the asset is issued, every investor interaction must pass a compliance layer. So first, investors complete identity verification. Only approved wallets can participate. Before each transfer settles, compliance checks run automatically, and smart contracts apply transfer restrictions and verify that both wallets meet eligibility rules. Each transaction also generates a record attached to the transfer. This allows institutions to track ownership, monitor activity, and generate reports. The result is a tokenized asset that can be distributed across hundreds of retail wallets while remaining compliant. Retail demand for tokenized assets is already growing, and the blockchain infrastructure is ready. What many institutions still need is the operational layer that connects asset issuance, compliance, and retail distribution. TMX Tokenized by Tokenminds provides that infrastructure. It enables multi-chain asset issuance with built-in compliance rules and investor registries. It supports KYC verification, transfer controls, and regulatory structuring. And it connects assets directly to retail wallets, exchanges, and DeFi markets on Solana. So if you're ready to launch a retail RWA products and reach a global base of investors, reach out to Tokenminds. Thank you for watching and see you in the next training video.